In this video, we're going to look at four stocks that are right near their 30-week moving average. Some have pulled back, some are crossing for the first time or second or third time, but it's been a while. And I believe that these four stocks are undervalued. So we're going to do this in order of largest market cap and then go backwards down to the smallest market cap. So if that's something you're interested in, stick around. That's what we're going to get into right now. First stock we'll look at here will be NVIDIA. Just real quick, we have the ticker here, the market cap, the shares. We have the corporate bond yields, the PE, the forward PE, the dividend. Over here, we have the growth rates that we get from Finviz for earnings. So we have the next 5-year growth rate, and then from year 6 through 10, we take that and cut it in half, then a discount rate, and then a terminal multiple to bring back a value for the stock today. That's what this model does. We have a gauge that gives us a score for this model right here. And then we have a valuation formula model. And then I have the 30-week moving average over here. What I'm going to look at here is first we're going to look at this model here, and you can see we have a present value of $233.95, but the current price is $137.71. So it's very undervalued on this growth model. Now we have the PE and the forward PE under 2027 here, where you see it turns black. That is the PE moving forward if these earnings grow at the projected rate that I have listed here. And then we have a 30-week moving average where when we come near this line, we tend to bounce off of it for NVIDIA, and we're only just a little less than 7% off of the 30-week moving average right now. And we were even closer to it over the past week. Now, if we were to take this stock here and put a 54 multiple in 2035 on this, which I don't think this will trade for a 54 multiple in 2035 because maybe the growth will probably be slowing down by then, right? Companies don't grow into fruition, but if it grows into 2045, maybe it will still be trading for 54 multiple. We'll just do some quick math. So if it was to trade at a 54 multiple, we'll just take a calculator here. Be 54 times, and then these earnings, 44.69. This would be a $2,413 stock in 2035 per share, without any splits or anything like that, based on the amount of shares we have today. And if it was to trade at a 22 multiple, it would be, let's see here, 44.69. Which I don't think is unreasonable. I think this could trade at a 22 times multiple, and it's actually even a 23 times multiple, the forward multiple. That would be a $983 stock. So this should outperform the market based on these growth projections. We'll take a quick look at VWAP. That's kind of similar. We've held VWAP for the last year. A couple times we came under. We were under it on August 7th and September 6th, and the market was kind of selling off there. And the Qs anyway, and this was a time to probably buy this stock because you had a lot of upside from there. This got all the way up to like 145, almost 150. So if you would have bought this at $98, you would have done very well. If we look at the daily moving average, we're hugging the 63. We have we're going above the 50 RSI, so money's coming back. That says money's probably coming back into this. If we look at the weekly moving average, you can see that we are in an uptrend. We've never broken down below the 30-week moving average. This is a 1-year chart of the 30-week moving average. We have not broke down below it once. We did touch it here once, which was, I believe, the 6th. Yeah, September 6th. We touched it. That would have been a great time to get in because when we just bounced right off of it. And now we're tight to it again. If we take a look at a 5-year chart since about 2023, January of 2023, we've been above the 30-week moving average. Every time it pulls in, we should be buying it based on this. And then if we just take a quick look at the trend channel here, we're in the bottom of a trend going up. We haven't crossed on the MACD, but we're getting ready to, or it's pointing up at least. The MACD is trying to cross the signal line, but it has not yet. And we are below the zero line. And we are just in the negative. Actually, looks like we are in 2.44. So we are starting to see accumulation for this stock based on the Chaikin money flow, and it's just the beginning of it. So there's a long runway for this. I don't think this is any news to anybody, but I just wanted to go through that real quick. So the next stock that we'll look at here is Micron. This trades at 30 times trailing, 8 times forward, and then you can see going forward that we have a very low multiple on this, and $32 based on these growth rates in 2035 would be their earnings. Today, they're $11. We get a very good quant score. I will go through this quick. This actually gets an acceptable buy price on this model here, which is very good because this is hard to get an acceptable buy price on. So, but Micron has poor technicals. We're just breaking back above the 30-week moving average. We're only about 2% above it. So we'll have to look at some other things to determine if it's a buy or not. We're going to look at VWAP here real quick. We have not crossed VWAP. I'd like to see it cross VWAP. So this is a number that I would pay attention to, about $107.92. If we cross that, that would be, that would be the time that we know that the institutions are getting in, right? We're struggling to cross it. We just cross it, and then we come back, and then we're kind of hitting the ceiling. But we've hit it 1, 2, 3, 4, and now we're hitting it a fifth time since September. So 5 times hitting a ceiling since September. Eventually, this will break through that ceiling and explode higher. And we're extremely undervalued on this model here. It's a $206 present value with a current price of $105. So even if these are off a little bit, these growth rates, it still is undervalued. Now, if we look at this, we look at the daily moving average. We're clearly across the 50 on the RSI, so that's bullish. We've come across the 63 exponential moving average. If we look at the 5-year chart, this is in a long-term uptrend, believe it or not. It just kind of has more of a roller coaster ride than NVIDIA does. And then now we're coming down. So we do want to see this 30-week moving average turn back up. Right now we don't, it's trending down. If we look at this on a 1-year chart, we can see that it's still trending down. If I look here, 103.45, 104, yeah, so it's still trending down each week. So we want to see this turn back up, the 30-week moving average, which it has not done yet. And we'd like to see a little bit stronger volume on a weekly time frame. If we look at the trend channel, we do have a clear cross of the signal line with the MACD. The MACD has crossed the signal line. We're in a slight downtrend, but pretty much trading sideways over the last year. And then we'd like to see this break above this too. If we really see this breakout, it should break through this ceiling and turn this trend so that it's pointing, going upwards instead of sideways. And the top of this channel is $120.56. And then our money flow is just below the zero line, but it is trending up. You can see we were at -10, now we're around -2. Okay, we're going to look at 2 more. This one's going to be Ingredion. So this company is undervalued in my opinion, and you can see if we look at the same value growth model here, it has a present value of $165.70 and a current price of $135.11. And for the people who like dividends, this is a dividend growth company with a 2.34% dividend. So you get a dividend and it continues to grow that dividend. I mean, it might not be the highest growth rate, but there's capital appreciation, plus you get a 2.25% or 2.34% yield. We have a 93 quant score. You can look at this 30-week moving average here, and you can see we came down and we broke below it just slightly, but then we just pivoted. We turned right back up, and now we're above it again. So I think that this is going back to 165. You can see the high was 155. I think we're going to be breaking that moving forward. But, who knows? I could be wrong. We're only 1.27% above the 30-week moving average on this pivot. So this is a very safe stock. If you are somebody who uses stop losses, these are just suggested stop losses. Do not, it's not I'm not giving you advice. They're just suggestions. The support is 132.66 with a stop loss of 126.03. So, I mean, that's 5% below support. So if you use stop losses, you're taking on very little risk for all, we're 22% upside to fair value. If, we look at VWAP, you can see we've been well above VWAP since about July, and we've been holding that. If we look at a daily moving average, we're slightly below the 63 exponential moving average. We are trending up towards the 50 RSI, but we haven't crossed it yet. If we look at the weekly moving average, you can see this on a long-term trend. This is 1 year. Anytime we come back to the 30-week, like this is a point where we came back to the 30-week on July 5th. That would have been a great time to buy this, right? Because that was around $113. The 30 week is 113, and the stock was right there with it. And then you could have bought it and rode it all the way up to 151. Now we've pulled back again to the 130. The price is 135.11, so we're right there again. And this is a good time to potentially. It looks like it's pivoting and bouncing right back off of it. And we'll check the MACD and the Chaikin money flow and the trend channel to see if that lines up with all this other stuff. This is also in a long-term uptrend, but it's just kind of a slow and steady long-term uptrend, and it goes up and down below its 30-week moving average for a period here, but now it's kind of holding it, and we're in the early innings of it holding it. You know, the real breakout probably, I guess, would probably be around here, 2022, and we're only, you know, it's only 2024. These can be above their 30-week moving average for years, but it did come down and break down a little bit and broke out again here in December of 2023. So I guess for like 1 year now, we've been in a uptrend. If we look at the trend channel, it's very tight, like, and this is a 1 year channel of the trend channel, and it's a tight channel, and it stays within it. And right now we're on the bottom, and to the upside of this is $156.11, and you can see it goes up to the top and comes back to the bottom. And right now we're at the bottom, and the MACD is actually crossing, I believe. Let's pull this up a little bit so we can see better. Yes, it is crossing. The MACD is crossing the signal line below the zero line, and you can see this histogram is, you know, it starts to go up and then pulls back a little bit. Now it's going up again. But Chaikin money flow, was all the way down at negative 38 on January 6th, and now we're all the way up to negative 19. Now that's not good. We're still at negative 19, so we do want to see money start flowing back into the stock. At the moment, that's not happening, but it is trending in the right direction. We want to see this above zero, right? We want it to look like this. This is where money is flowing in, and we want to get in as it's trending up. So if you get in here, you don't necessarily have to get in across the zero line. You want to see it going from negative to less negative and so forth. And when it gets way up here, sometimes that's when it gets overextended. Okay, this will be the last one we look at here. This is Mueller Water Products, and this is just for a base, you know, infrastructure on water, right? They make like fire hydrants and the valves for different water systems. So this has a very good quant score. It's undervalued. The present value is 23.94, so it's right about fair value. We have a trailing PE of 31, a forward PE of 15.22, but this is more of a technical because we're about 5% above the 30-week moving average, but we've also pivoted. And we can see, you know, we've gotten the 25.68. Our 30-week high was 26.28. Right now we're at 22.94. Now, some people might say, oh, like $3, $4, that doesn't sound like much. But when you're talking about a $22 stock, that is a lot. That's 20%. You know, if this goes up to $26 or $27 or breaks this high, that's going to be well over a 20% gain. So keep that in mind. Dollar amounts, pay more attention to percentages than dollar amounts. If we look at the VWAP, we've held that for the last year. If we look at the daily moving average, we're coming up above the 50 RSI. We're trying to get back above the 63. We're 0.26% below the 63 exponential moving average. The weekly moving average, we've held this for 1 full year. And right now, you know, last week, January 10th would have been the right time to buy this, knowing that this holds its 30 week for a whole year, right? So if we would have bought this last week, we could have got into it for like $21. Now we're going to pay, you know, $1, $2 more because it's of waiting. And I have a weekly relative volume screen. So if you want to pause the video, these are all stocks that have relative volume. This is stocks that I believe are all undervalued, and they have relative volume, some of them to the bad and some of them to the good. But if we look at Mueller Water Products that I have highlighted right here, we have 1.55 relative volume. So the share price is $22.94 right now, but last Friday it was $21.65. So we could have got into this right when it touched the 30-week moving average at $21.65. Things are a little more clear on a 30-week. On a 5-year chart, you can see we go up, we go down, we go up, we come down, we go up, we come down, we go up, and we're holding, and the 30-week is still in an uptrend. So I don't see this breaking down at the moment, but you know, you can always use stop losses and protect your downside. This is not meant to be a recommendation, so just keep in mind you got to do your own due diligence. We're in a 1 year uptrend, as you can see here. This is just more of a clear picture of the 1 year uptrend, and we're towards the bottom of our trend channel. And if we get to the top of it, that would be $28. That's what, $7 of upside on a $23 stock. So that's seven divided by 23. 30% of upside. You have 30% upside to the top of this channel. We crossed the MACD has crossed the signal line, and we've crossed the Chaikin money flow. So we're starting to get accumulation for this stock by institutions. So all of these things make me like Mueller Water Products. I think all of these are compelling investments based on where they are right now, whether you want to trade them or own them. I think these are fine stocks to own. They're also fine stocks to trade because there is short-term upside and long-term upside. But I think there could be some explosive upside if you wanted to hold these stocks over the next year, and trading in and out of them, you might miss that explosive upside. But if you're happy with, quick 10% gains or whatever over a few weeks or a month, I think you could get that out of these possibly. So that's all I got for you. I hope those videos helped you, or I hope this video helped you. Thanks for watching. And if it did help you, or if you found any value in it, consider hitting the like and subscribe button. Thanks again.